that makes sense. I think we'll finish off at that. Kim had asked me to do the shakeouts process, but I thought it was worthwhile doing it inside the other stuff we've learned this week about the movement of value. So using profile, we can see the movement of value. Using the shakeouts or the spectrometer, we can predict the movement of value with a very high statistical probability. And if we can predict the movement of value with a very high statistical probability, because that's what it is, statistics, we can capture some of these crazy movements in trade actual ideas. Any higher high or any lower high gives us a story. Any higher low, sorry, gives us a story. So when we see a blue area here and we see a red area driving, as soon as this blue area shows up, I'm in. I am looking for that as a possible play. As soon as that red area is higher than the last red area, I am looking for a trade into any drop phase. There it is there. If the red area stops making higher highs, as it does here, then I'm not going to start buying it anymore. I know that the blue area will start to drag lower. And the blue area, lower low, will start to now move the needle to the downside. For me to be a buyer, I would need to see, for example, an A10. There's A10 there. If I was going to buy this, that might be my opportunity to buy it there. Turned out to be a great trade, didn't it? Turned out to be a great trade, didn't it? Yeah. So you can see the A10 was the right trade at the right price in the right area under the right circumstances. So again, it became what is known as a switch trade. You can see it switching to the liquidity to the downside, running the switch back out of that area there. And obviously that would have been your buy trade, but it was at a lower price, but it's still on a what? You know, the profile still hasn't really gone offered. So we had a higher profile here, a lower profile here. And obviously this profile here is still holding the bid. So we can look at those two very closely matched profiles and we can say, well, a red below that price would be bearish, but a blue above this price is still bullish, right? Well, we never got any reds below that price. The reds have always been at or above that price area. At or above it. This blue is above this price area here, so the bulls are still in this game. And obviously that bullish move has been very good because we got another pin zone here. And we can obviously look at that pin zone there and say, right, we got the big volume arrival coming in that candle. We never get any A10s to help us, but we got the big volume coming in there. And there's a possible buy trade again there. Why would you want to buy it? Because the reds have gone back on the offer again. They're pulling the offer. And if the reds are pulling the offer, this becomes validated again as a buy trade. And from that point, the reds are still pulling the offer. Look. So that would have been your last buy opportunity right there. So even the last two trades you've got, which was at 660s, is currently trading 820s. 160 points. $3,200 profit in the last hour on that buy trade there. Using the process of the spectrometer, the process of transform, understanding that transform is a market profile in real time. It's a market profile predictor in real time. That's what it is. Something that Stadelmeier and Dalton has never been able to achieve. They've never had a prediction. They've just got the background, the reality of what happened. They've not tried to make a prediction, to be fair. They've just told you what the reality is. What this does is it makes a prediction of what the future reality will look like. A higher unfair low means a higher unfair high. It means a higher fair value. It's as simple as that. Think about the power in that. Think about how you could use it. And then start putting that into your plays, into your ideas. And of course, you could have, instead of using these POCs, you could, of course, have a simple moving average. Wherefore a blue above a moving average would be perfectly validated for a trade. So you could put on a 50 candle moving average or a 200 candle moving average and whatever you want to do, and you can simply then buy the blue pin zones above and sell the red pin zones below a moving average, and that's perfectly validated. VWAP, another one. Anchored VWAP from the cash open if you wanted to, right? You could use an anchored VWAP if you wanted to. If you are looking for trade opportunities, So you could use moving averages. You could do all sorts of different things you could find in terms of fancy stuff that you can that you can use. You can use I don't know where any of the I can't remember where the anchor VWAP is, guys.